Most traders try to predict the market without even knowing what direction price is moving. In this video, I'll show you a simple way to read market structure so you can tell if price is going up, down, or just moving sideways. We're going to get straight to the point, no intro here. How you doing? My name is Slime. That's a brief intro. But part one, what is market structure? Market structure is just a pattern that price makes as it moves. It tells us who's in control, whether it's buyers or sellers. If you look on my screen right now, of course you're looking at the screen, but you see I have three squiggly lines, right? To my left, we have a buy structure. To my right, we have a sell structure. In the middle, we have a range structure, right? Instead of guessing, we let price show us the story. So, with this video, I'm going to show you guys how you can understand what you're looking at, right? Okay, number one, uptrend structure, higher highs and higher lows. In an uptrend, price keeps making higher highs and higher lows. To simply put it, higher highs equals buyers push price above previous price. Higher low means buyers stepped in before price fell too low. These are the exact meanings if you need to understand. A higher high is when price came higher than the last high. So if this is a high, price came higher than the last high. So the first high, price then came higher than this high. This is another higher high. Why? Because price is higher than this high. Why is this a higher high? Because it's higher than this high. You understand? Good. Now, a higher low. It's called a higher low because price, it's where buyers stepped in before price sold. This is a higher low. It went higher than the previous low. So if the low starts down here, this is a new low. This is the next new higher low. It's higher than this low. This is the next low. Why? Because it's higher than this low. This is the next low. Why? Because it's higher than this low. Simple. That's what has to happen on a buy trend. You can just come here, place your line. Oh, price does this. Price does this. Price needs to do this. Entry here, entry here, entry here. You understand? Higher high. Higher low. Higher low. Higher low. Higher low. Right? Cool. As long as higher highs and higher lows are forming, buyers are in control. That's my example. That's what you need. I'm going to show you examples at the end of the video. Downtrend structure. Lower lows and lower highs. What we just looked at were higher highs and higher lows. Now let's flip it. A downtrend happens when price makes lower lows and lower highs. A lower low means sellers push price below a previous low. And a lower high is sellers stepped in before price could rally much. That's the definition. What that really means is higher low. It's higher than the previous low. You feel me? So you have a lower low, lower low, lower low, lower low. Let's mark it out. L L L L L L L L L L L H L H L H L, H, L, H. Now, this is a lower low. Why? It's lower than the previous low. The other low would have been somewhere up here. This low is lower than this low. And this low is lower than that low. And this low is lower than that low. Same thing with the highs. It's called a lower high because the high is lower than the previous high. You see? High, 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 high. And this one will be, you feel me? Just lower than the previous structure. As long as lower lows and lower highs are forming, sellers are in control. This is my great downtrend structure. I'll show you another example at the end of the video. Part 4, when structure breaks. But before we get to there, we're going to do a range structure since we're here. A range structure, that's when there are no lower highs and no lower lows being formed in the market. There is no way for you to tell where market is going. You're sitting here and it's not breaking highs, it's only breaking internal highs but not external highs, and it's just bouncing in between these lines and deciding not to go nowhere. That is a range structure. You see how that looks all weird? It looks like it wants to go up, but it's just not going up. That's what a range structure normally does. So, uptrend, downtrend, range, market structure. All three of these is what makes the market up. Okay? When structure breaks. This is important. Trends don't last forever. A trend changes when structure breaks. Uptrend break when price fails to make a higher high and drops below a higher low. And then we have a downtrend break when price fails to make a lower low and price breaks a lower high. When structure breaks, control is shifting from buyers to sellers or vice versa. Now, on our screen, I have 3 different examples, right? The first example is a sell structure turning into a buy structure. See, you have a lower low, lower high, lower low, lower high. Matter of fact, let's mark it up. Lower, low, lower, low, lower, low, lower, low, L, H, L, H, L, H, L, H, right? So you have a sell structure coming in, but then here's what you noticed, right? We're not making no lower lows no more. We're stopping. We're just ranging now. But then again, look, price decides to break, give you a higher high, higher low, and start making higher highs. You see? So this is when structure begins to shift. This right here. Part 1 is when we're not making any more lower lows or lower highs. Part 2 is when structure breaks the system and then it begins to bounce off the previous system to find support and push off. Feel me? Now, buy trend, same thing. Higher highs, but then again, we're not making no more highs, right? We begin to shift into lower lows and lower highs. You feel me? All it is vice versa. Now, when it comes to the trending market, what you got to do is you got to wait for price to then break either or to then begin to make structure, if you get what I'm saying. So there's no higher highs, no higher lows are being formed here. And then boom, higher high or lower low, lower high, higher low. You understand? And you need one of those to happen so then you can start making your decision. Before I ever mark up supply demands or even take a trade or check before I take a trade, I need to figure out structure first. Structure tells me direction. Then we look for setups in that direction. This step is very crucial because getting this part wrong, which is the first part of your setup, basically will destroy your whole entire system once you get this step wrong. So, what do we learn? Higher highs and higher lows equals uptrend. Lower lows and lower highs equal downtrend. No clear pattern equals ranges. And if you understand how to read this, you can stop guessing and start trading with the market instead of going against it. You feel me? Brief example, real quick, is look, we have, if you want to really look in, matter of fact, let's do a box. Let's look in. Lower low, lower high, you know, let's grab the box. Lower low, lower high, lower low, lower high, lower low, lower high, structure broke, higher high, higher low, higher high, higher low, structure broke, lower low, lower high, structure broke, higher high, and it needs to make another higher high so it can then become a higher low. You understand? Cool. Glad I can show you guys something. If you're new to the channel, make sure you like, share, and subscribe. If you're old to the channel, make sure you like, share, and subscribe. Thank you.